Ever pondered the importance of life insurance in your financial planning? It's a topic that many of us tend to overlook, yet it holds a crucial role in our financial stability. Life insurance isn't just about preparing for the unexpected, it's about providing our loved ones with security and peace of mind. This video aims to shed light on the different types of life insurance, their pros and cons, and how to choose the one that best suits your needs. Stay tuned as we dive deep into the world of life insurance. Life insurance, in essence, is a contract between you and the insurance company. This kind of agreement, in its simplest form, provides financial protection to your loved ones in the event of your passing. It's a crucial part of long-term financial planning, as it ensures that those who depend on your income are not left in a lurch. Imagine a safety net, securely catching your family in case of an unforeseen fall. That's what life insurance does. It provides a buffer, a security blanket, ensuring that your family can continue to live comfortably, even in your absence. Moreover, it can also serve as a strategic financial tool. Some policies accumulate cash value over time, which can be borrowed against or even used to supplement retirement income. Remember, it's not just about providing for the here and now, but also about planning for the future. Now let's delve into our first type of life insurance, term life insurance. Term life insurance is a straightforward and affordable form of life insurance. It's like renting a house. You pay a set premium for a specific period, say 10, 20, or 30 years. If you pass away within that term, your beneficiaries receive the death benefit. If you outlive the term, well, the coverage ends, and you walk away with no return on the premiums you've paid. Now let's talk about the pros of term life insurance. First, it's the most cost-effective way to get maximum coverage. This means, for the same amount of premium, you get a higher death benefit compared to other types of life insurance. It's particularly useful if you have a temporary need for coverage, like until your children are grown and financially independent or your mortgage is paid off. Another advantage is its simplicity. You pay premiums and in return, your beneficiaries get a death benefit if you pass away during the term. There are no investment components or cash values to worry about. However, term life insurance isn't without its cons. The biggest drawback is that if you outlive your term, you get no return on all the premiums you've paid. It's like paying rent. You're covered as long as you pay, but once you stop, you have nothing to show for it. Additionally, if you want to renew your policy after it expires, you'll likely face higher premiums, as they increase with age. Also, if you develop a health condition during the term, it may become difficult or more expensive to get insured again. Term life insurance doesn't build any cash value that you can borrow against or use for retirement or other financial goals. In a nutshell, term life insurance can be a great choice if you need a large amount of coverage for a specific period, and you're comfortable with the coverage ending after that period with no return of premiums. Despite its simplicity, term life insurance isn't the only type available. Let's explore another, whole life insurance. Whole life insurance, as the name suggests, covers you for your entire life. Unlike term life insurance, which provides coverage for a specified term, whole life insurance is a permanent policy that remains active as long as the premiums are paid. Let's delve into the features of whole life insurance. One of the main characteristics is its lifelong coverage. As long as you're paying your premiums, your beneficiaries will receive a death benefit no matter when you pass away. This is a comforting thought for many, knowing that their loved ones will be financially protected. Another feature is the cash value accumulation. Part of your premium goes into a cash value account, which grows over time on a tax-deferred basis. This means you won't pay taxes on any earnings as long as the money remains in the policy. You can borrow against this cash value or even surrender the policy for the cash. However, it's essential to remember that any unpaid loans will be deducted from the death benefit. Now let's look at the advantages. Whole life insurance provides a guaranteed death benefit, guaranteed cash value growth, and level premiums. These guarantees provide a sense of stability and predictability, which can be a significant advantage for long-term financial planning. However, whole life insurance also has some disadvantages. The most notable one is the cost. Whole life insurance policies can be significantly more expensive than term life insurance. Also, the investment component can be less efficient than if you were to invest the money yourself. In conclusion, whole life insurance provides lifelong coverage and a savings component, offering both death benefits and a cash value. However, these benefits come at a higher cost, and the investment return might not be as high as other investment options. Choosing between term and whole life insurance comes down to your financial situation, your needs, and your long-term goals. While whole life insurance can be a great tool for estate planning, term life insurance might be a more cost-effective solution for those needing coverage for a specific period. Now that we've covered term and whole life insurance, let's move on to a more complex type: indexed universal life insurance. Indexed universal life insurance is a type of permanent insurance that adds an investment component. This unique blend of insurance and investment offers a degree of flexibility and potential for growth that sets it apart from other life insurance types. Let's delve a little deeper. The premium you pay for indexed universal life insurance is divided into two parts. One portion goes towards the cost of insuring your life, while the other portion is invested in an index-linked account. This means your cash value has the potential to grow based on the performance of a specific market index, such as the S&P 500. But don't worry, your investment isn't directly in the stock market. This means that even if the market takes a downturn, your cash value won't drop. You're shielded from the risk of market losses. However, your gains are also capped, so you won't fully capitalize on a booming market. Now, why might someone choose indexed universal life insurance? Its main attraction lies in its flexibility. You can adjust your premium payments and death benefits to suit your changing needs and circumstances. Plus, the potential for cash value growth can be a compelling factor for those who are comfortable taking on a bit more risk for the possibility of larger returns. But indexed universal life insurance is not without its drawbacks. It's more complex than other life insurance types, and the cost of insurance can increase as you age. The investment component also means that your returns aren't guaranteed and will fluctuate based on the performance of the index. So, who is it for? Indexed universal life insurance can be a good fit for those seeking a flexible policy with an investment component and are comfortable with the associated risks. It's also well suited to high-income earners looking for additional tax-deferred or tax-free investment avenues. These three types of life insurance each have their unique characteristics. Let's compare and contrast them. Understanding the differences between term, whole life, and indexed universal life insurance is crucial. Let's start with term life insurance. This is the simplest form of life insurance, offering coverage for a specific period. If you pass away during the term, your beneficiaries receive the death benefit. However, it lacks the cash value accumulation feature. Transitioning to whole life insurance, it provides lifelong coverage and has a cash value component that grows over time. It's more expensive than term insurance, but the coverage doesn't expire as long as premiums are paid. Then we have indexed universal life insurance, which is a type of permanent insurance. It offers flexibility in premiums and death benefits, along with a cash value component that grows based on a stock market index. All three have their merits, and your choice depends on your needs, financial situation, and long-term goals. With these comparisons in mind, how does one choose the right option? Choosing the right life insurance depends largely on your individual needs and circumstances. It's like fitting a puzzle piece into your financial plan. So, where do you start? Consider your age and financial situation. Younger individuals or those with a tighter budget may lean towards term life insurance. It's simpler, more affordable, and provides coverage for a specific period. On the other hand, if you're looking for a lifelong coverage and a cash value component, whole life insurance might be your cup of tea. It's pricier, but it offers a guaranteed death benefit and potential dividends. Then there's indexed universal life insurance. This option is for those who are comfortable with market-based risks and are seeking flexibility in their premiums and death benefit. But remember, there's no one-size-fits-all. Weigh your options, evaluate your needs, and consult a financial advisor if needed. Remember, the right choice of life insurance can make a significant difference in your financial planning. We've covered a lot of ground today, discussing the importance of life insurance and exploring its various types. We delved into term life, whole life, and indexed universal life insurance, each with its unique characteristics, pros, and cons. We've compared and contrasted these options and offered guidance on choosing the right fit for your individual needs. The key takeaway is the importance of informed decision-making in this process. We hope this video has enlightened you on the importance of life insurance in your financial planning. Remember, the best insurance is the one that suits your needs and gives you peace of mind.